and welcome to the Fairway Independent Mortgage Corporation Mid-Atlantic YouTube channel. If this is your first time here, welcome. If not, welcome back. But either way, we're absolutely thrilled you're here. Now, there are two questions that every single person asks a loan officer when they are considering financing a new home or refinancing their current one. Can you guess what they are? Okay, well, I'll tell you. The first is, what is my interest rate? The second is, what is my monthly payment? Both are really important questions, but for the purposes of today's discussion, we're going to focus on the question of, what is your monthly payment? And perhaps more importantly, what does it consist of? Before we dive in, however, make sure you hit that like and subscribe button down below so that you never miss a video from us again. Each Friday, we post a video to give you the information you need to feel like an educated and empowered home buyer. While we understand this process can be overwhelming, please know that we are here to answer your questions and give you the tools you need to feel ready to take on this process. Should you have any questions, please feel free to contact us directly or comment below, and we'll be sure you get the information you need, but more importantly, the information you want. Okay, let's jump into today's conversation. When thinking about your monthly mortgage payment, it's important to understand that most cases, your mortgage payment is made up of at least three components. First, your principal and interest. Second, taxes. And third, insurance. In some instances, you will also pay an association fee. Let's start with principal and interest, or as you may have heard it referred to before, as P&I. The easiest way to think of your P&I portion of your monthly payment is that it's the part determined by your actual mortgage. This section of your mortgage will never change over the life of your loan, unless of course you refinance. P&I is calculated using something we call simple interest. This simply means that the interest is always calculated based on the amount of principal left to be paid back. While the total amount of P&I you pay monthly will never change, the interest is calculated not on your total amount borrowed, but instead on the amount you have to pay back, meaning each month the amount of your payment that goes to principal will increase and the amount that goes towards interest will decrease. At some point, you will begin to contribute more to principal monthly than to interest. If this is of particular interest to you, please reach out to your loan officer and they will be happy to go over what your monthly payment in proportions look like for the life of your loan. Another important thing to understand about P&I is that you are always paying in arrears. That means when you pay your June mortgage payment, you are paying for the month of May. So when you bring your first mortgage payment with you to closing, you then don't have to pay your mortgage that first month you're in the house. So for example, if you close in May, you will not pay a mortgage payment until July. Well, you will pay it, but it's at closing. We'll dive into what makes up closing costs at another point. But for today, just know that your P&I is always paid in arrears. The second portion of your mortgage payment is taxes. The amount of property tax you pay is fixed, and the lender does not control that. In most instances, your yearly taxes are divided by 12 and paid monthly as part of your total monthly mortgage payment. Whether taxes are paid in arrears or for the upcoming month differs from state to state. The last component of most monthly mortgage payments is insurance. There are two types of insurance to keep in mind: homeowner's insurance, which will apply to everyone, and mortgage insurance, which is really a situation by situation instance. So let's start with homeowner's insurance. This is required no matter your situation. You will obtain homeowner's insurance from a third party, and the servicer of your loan will pay that for you each month. Unlike P&I and some tax payments, depending on your state, this is always paid going forward and never in arrears. Both taxes and homeowner's insurance, in most cases, are paid from an escrow account and your servicer handles it for you. Absolutely nothing for you to worry about. Mortgage insurance, however, is only applicable if you put down less than 20% on your home. The cost, time span you pay it, and the format in which you pay it varies based on product and mortgage insurance company, and is something your loan officer will go through with you in detail. Please know that mortgage insurance should absolutely not be a deterrent, and your loan officer can explain all of the implications and ways to make your home buying experience work for you. The last portion of a mortgage payment is only applicable some of the time. This is association fees. Association fees are paid if you have a homeowners association based on where you are buying. You can expect to see these fees as part of a condo, co-op, or PUD, which stands for a planned urban development. Your monthly mortgage payment is important to understand. Please make sure you ask any questions you may have to your loan officer, no matter how big or small, and ensure exactly where your money is going each month. Hey, you work hard for it, know where it's going. Thank you so much for tuning in, and we'll talk to you soon.